Get ready for manipulation as we move into the second half of the week. This is typically the time where we see that unexpected big reversal or move that catches most people off guard. Emotions are running very high right now. People are trading very impulsively, and only one thing is certain: the market will always look to wreck as many people as possible. So make sure to like this video, make sure to subscribe to the channel, make sure to click that bell for notifications, because we are bringing you the most timely updates here on YouTube. I'm going to be diving into these charts, showing you exactly how I am trading this price action right now, as well as how I plan to trade it in the next few days. So on the daily time frame, we have been in an uptrend since November 30th, 2022, making our low, our high, our higher low, and our higher high. But we have been currently running into this zone of resistance for the past 2 weeks, printing some kind of bearish signs on our oscillators. We can see as we come into the resistance, the momentum waves on market Cipher B are getting lower. We also see the RSI printing multiple drives of bearish divergence. And this is why we were ready and prepared for this exact level, giving the short setup in advance in the Casper Crew VIP Discord, where we gave the short from $24,000. I'm currently still holding this short trade. And by the way, if you do want to join the community where we give the trade setups in advance, where we do 3 live streams every single day going through the live price action, giving our levels for scalps, day trades, swing trades, the most thriving community in this bear market, you can go to patreon.com/Jason Casper. Also, if you want to take advantage of 0% fees on ByBit for limit orders, you can check out the link in the description or the pinned comment. Actually, a really good deal if you are trading on lower term time frames, because those fees can really eat into your profits. Also, if you want to learn how to trade this way, where you have a plan in advance and know exactly what you are looking for before you get into the trade, check out the course, jasoncaspertrading.com, 20% discount in the description. So as we come up to this key zone of resistance, we have to be honest with ourselves and say getting overly bearish right here is an irresponsible thing to do. Objectively speaking, when we're looking at higher term timeframes and we're coming into resistance, we should always be prioritizing looking for those swing short trades, or at least those trades that we can take and maybe look to hold for a pullback. The only way right here that we can be bullish in the immediate short term is if we get a break above this $25,000 level. And the reason why is because this will actually be a breakout of a massive range that we have been trading since June. We can see that this level has been respected since May. And so unless we do something like this, where we get another big move to the upside, retest this box as support, then I will not be getting overly bullish on the immediate short term. On the higher term time frame, as you guys know, I am bullish when I'm looking at the monthly, when I'm looking at the weekly, okay? But this is what we need to see if we want to see more upside. And the reason for that is because if we can break above this $25,000 level, this is the doorway to Pump City. This is absolutely the doorway to Pump City. We will get sucked up to that $30,000 level. And if we reclaim 30K, we will continue to go up higher. Now, we need to be watching the dollar and we need to be watching the S&P 500, because after the news came out yesterday that Jerome Powell was a little bit more dovish, saying the jobs reports were better than he thought, we did get another pump to the upside on Bitcoin, but that also was short-lived. We fell into local resistance and we're now kind of stopping there. So the dollar, we can see, came down to our key level of support right here at 101.297, a very important level. And as we were warning about, we did in fact just come down to grab the liquidity before getting a bounce to the upside. Now look at this, very interesting. Yesterday, we came up to that Fibonacci golden pocket retracement, got a little rejection, but we are currently retesting right now this very important support resistance flip at 103.049. Now we can see right here on the daily time frame that this is a very important zone. If the dollar loses this zone, we can see another move to the upside for Bitcoin. However, if the dollar holds this as support, we do need to be prepared for that pullback. We also need to be looking at the S&P 500. S&P 500, as we can see, did get a bounce yesterday from the Fibonacci golden pocket, but failed to make a higher high and is currently right now making a lower high. So if we see the dollar continuing to hold support and getting a move to the upside, and if we see the S&P 500 continuing in this now local downtrend, making a lower low, then we need to be prepared for a pullback on Bitcoin. Okay, so in order to understand what is going to be happening here, we need to look at lower term time frames. So we are going to be coming down to the 4-hour, and this is how I plan to pretty much trade this price action right here. Okay, if we take a look at all the levels that we see on this chart, we can see that these are the key levels that we need to be aware of for the Bitcoin price action. We can see right here that we are locally rejecting right now from this value area high of the range. Okay, what is the value area? This is where the price of the asset is trying to establish a fair value based on volume. The market is saying that if we are in this zone where the candles here are shaded, that is considered fair market value. Anything above that is considered overbought, and there needs to be a correction to the downside. Anything below this is considered oversold. There needs to be a correction to the upside. As you can see right now, after the news came out yesterday, the bullish news, we did simply just come up to that zone where Bitcoin is considered to be overbought, and now we are currently getting some kind of a rejection. And if we take a look at the market Cipher B4-hour time frame, it looks like we are about to print a bearish trigger wave and get another drive to the downside. In addition to that, we can see that just above us, we have the CME futures gap that just missed being filled. So in my opinion, this is a sign of a little bit weakness. The fact that the Bitcoin price did come down to key support, which by the way was a trade setup that we also did give in the Casper Crew VIP Discord, making that higher low with our bullish divergences. So we did get that move to the upside. We didn't hit our final target, at least not yet. But the fact that we're rejecting here is a little bit weak because this could be our high and now our low and now our lower high, and maybe now we will put in a lower low. To the downside, there are some very important areas of support that we need to be aware of. Support number one is going to be the liquidity down here. Okay, this could be a very important zone where if the Bitcoin price comes down below this level and stops everybody out who has been in the market pretty much since the 22nd of January, we could see some bullish divergences here on Bitcoin printing on the 4-hour time frame, which could actually give us a fake out to the downside. And again, this could wreck a lot of people because if we start to now lose these levels, we're going to see a lot of people FOMOing into short positions, potentially getting wrecked if we get that reversal with the bullish divergences on the 4-hour time frame. In addition to that, underneath this zone of liquidity, we have another very important zone of support, which is the Fibonacci golden pocket and the pre-FTX dump high coming in between 21.4 and 21.7. Again, if we start to get a very big move to the downside here, we could really see a lot of people trading on emotion, opening up short trades at these very important zones of support, only to get trapped and see a move back to the upside. Now, there is also a chance that when New York opens today, we will see another big pump to the upside. If that is the case, the levels that we really need to be aware of right now are going to be the Fibonacci golden pocket coming in at 23.6. If we come up here and we're seeing bearish divergences now on lower term time frames, such as the half-hour time frame, which is very, very possible, we could get a move up right here, printing that bearish divergence where the momentum is getting lower as the price is getting higher. That could actually give us a rejection. And a lot of people, when they see the market starting to pump again after yesterday, will be FOMOing into long positions, only to get wrecked when we come right into key resistance, right? People tend to long into resistance and short into support, but we need to be aware of these levels so that we can be looking at the charts objectively and trading in the right direction of the market. Now, there is also a chance that we do continue to short squeeze and basically stop out everybody who has been short here. If we take a look at the order flow chart, we can see that the majority of the traders that have been opening up positions in this zone have been opening up short positions, which means there's a lot of shorts right now that could get absolutely squeezed. Now, if this happens and we start to pump, I guarantee a lot of people will be getting very, very bullish, and they will be looking to long a breakout, thinking that we are going to go to $30,000. But here's what we need to be very much so aware of. Just above us, we have very, very key resistance around 24.6 to $25,000. And as we look at this chart forming right here, even on the daily time frame, we are primed to print a very, very bearish divergence on the daily time frame. If we get that move up into key resistance, look at what could happen here. As we print this green dot on Market Cipher B on the daily time frame, we could get another drive of bearish divergence as we smack right into resistance. So really be aware of these levels, guys, because these are the levels where we will get into our best trade setups. We never want to buy low and sell high. We never want to buy high and sell low. We only want to buy low and sell high. And so we need to be aware of, first of all, this liquidity down here. Second of all, this major zone of support. And then to the upside, we need to be aware of the golden pocket as well as this key resistance above us. We cannot get overly bearish or bullish while Bitcoin is simply just trading in a sideways range. We need to be looking at this objectively, saying, where is the best place for me to get into the market? Again, we know on the higher term time frame, we are at key resistance, which means if we can get into a short trade from one of these key resistances and Bitcoin actually gets the pullback that a lot of people have been expecting, it could be a very, very good short position. On the contrary, if we do get a big move to the downside because we are in bullish market structure, it could make for a very, very good long position. That is it for today's video, guys. Just wanted to come in, do a thorough analysis for you. May God bless you all in the name of Jesus the Messiah. I pray everybody is very, very blessed, and I will see everybody in that next video. Peace.